the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, as the world moves toward decarbonization and digital transformation, investors are increasingly eyeing startups at the forefront of green energy and next-generation technology. From breakthroughs in renewable infrastructure and energy storage to innovations in AI, blockchain, and climate tech, these companies are not only solving pressing global challenges, but also creating compelling investment opportunities. However, with the influx of capital and heightened interest, the landscape is also becoming more complex to navigate. So what should investors look for? Where are the emerging markets of opportunity? And how do you strike a balance between financial returns and long-term impact? Well, to find out more, joining me now is Peter Lundgreen, who is the CEO of Lundgreen's Capital. Peter, welcome to the show.
Yeah, hello. Thank you. It's a pleasure.
Thank you so much for joining us. Peter, what trends are currently shaping investment opportunities in green energy and tech startups on a global scale?
Yeah, if we really take the high-level picture, so to say, I would say 3 years ago, the green technology and green investments were still very hot. Within that time frame, it has lost attention, and particularly with, let's call it the political headwind from U.S., it has lost a bit attention, and in the same period, we see clearly that tech investments, predominantly due to AI, Web3, is really on the rise again. That is sort of very high-level trend we observe.
All right. Well, what regions or countries then are emerging as hotbeds for green innovation and tech entrepreneurship?
Yeah, so honestly, if we start in your region, China is actually powering ahead within sort of the green area. Maybe a bit more in, lowering the carbon footprint. Again, with trying to introduce more renewable energy consumption into the overall energy consumption needs, but they're sort of less involved in sort of what I would call the ultimate and high-tech carbon killers that we see a bit more in Europe, to be honest. If we go into sort of the advanced end of technology, Europe is still hanging in investing into advanced technology where we see a sort of carbon negative technologies getting developed. Okay. This is, again, the global picture I see.
Well, Peter, then how do you evaluate whether a startup in the clean tech or renewable energy space has, scalable and commercially viable technology?
Yeah, let's be honest. This is a minimum the $1 million question. It is for investors looking into the green tech space. It is complex. It's really complex. Honestly, you need to spend a lot of time to sort of simply to learn. And if we look into startups, as a green tech startups, they are very difficult to assess, and let's be honest about it. But what we will try to do is to get a realistic impression about what is actually the deadline for the proof of concept of the technology of the product they're involved into. And that seems simple. Often just to get the proof of concept, and we're not even talking about the proof of business yet. Normally it will take longer time than expected. That happens for many startups. But the next question to ask, also sort of an early stage for investors, is to get an impression about if the technology works, how good are the scale-up opportunities. And it turns out we have green funds ourselves, so we have learned a bit ourselves as well. That even if the sort of the proof of concept seems to be there, and we say yes, now we're there, then the scale up and get it to real sort of higher volume. That is often a challenge, a bigger challenge that we would normally see in many other startups. And that is an observation we have done also in companies where we have not invested, simply looking into what happens in the market. So these two things are actually quite interesting to try to determine if an investor is looking into a very particular company. Secondly, as always, at any startup, you will always look at the team, who are the people, who are the founders, who are behind it. But again, when we come into the green technology, it's still a new area. It's sort of coming out of the universities still. People have been involved in green technology maybe since the mid-90s, but in the universities. So the drivers behind what we're seeing, people need to observe if sort of is the professors, the PhDs, or is it how much are businessmen involved in the company already? And that is true, let's be honest. We as investors at some time, we are very happy for the good things that happen about green tech. If we invest into it, we try to allocate capital into doing something good for the world, actually. But we also need to see some return. Otherwise, there'll be no more capital to allocate. And now and then there's a lack of the number of businessmen in these green tech, new young companies. So the commercial part of the company might lack a bit, and that is actually pretty important to have an insight about as well. So these are some of the very fundamental things we look into, and I would, of course, recommend each and everybody to have these considerations when looking into green tech. Yeah, complicated it is.
Well, Peter, I mean, investing in early-stage climate tech offers the potential for high impact and high returns, but also comes with unique risks. So from an investor's perspective here, what are the biggest risks and rewards when backing early-stage companies in the green tech space?
Let's take the reward first. So the very fundamental part is there should be two rewards. And again, using private capital to do something good for the world is not wrong. That's actually, as we think, it's an extra add, to be honest. And as we are talking about risks, and it's a bit unknown, there should also be some extraordinary upside. That is sort of normally what you would expect. It can be that part of the upside is that you actually do something good with your money, and then you get a fair return in addition. But I would say the green companies that crack their code, whatever they're involved in, they have a very, very good position. And there I still see they will be pretty valuable because we are talking about a world that has an unlimited energy appetite. We simply consume more energy. So the companies, the green startups that turn into true commercial success, their investors, I think they will be really good rewarded in terms of higher valuation of the company. So that is sort of also fitting well to higher risk, higher reward. But if we're looking into the risks, again, what I would say, time to commercial success, that is the biggest risk. What we observe is that what we call the death valley. This is where startups, so even if they sort of start to produce, start to sell something, before they are on the other side of the valley where they actually have positive yearly result. That's a long, long walk, a long journey. It's hot and it's difficult, like it is in this valley. And I'll say a sector that has the longest walk is typical within biotech or medicals. But what we have observed is that the time to commercial success is longer for green tech companies than originally expected, to be honest. As where many people, they like companies to be at least profitable or close to after 3 years. It takes longer for green companies. So that is certainly a risk. And then again, investors should look into if competing technologies is an issue. It doesn't have to be. If, as an example, is where we invested a lot is in a company that produces green oil on biomass and can't be used for anything for anything at all. And you would say, okay, there are other producers using the same technology out there. Yes, but it doesn't matter because the world can consume all the oil, the biochar, whatever they produce. So it's like in the oil company today, it's not a problem for the big oil producers because the world consume energy. So it doesn't have to be a problem. And we prefer to be in a sort of in the ocean where we say, regardless if they're competitors or not, then it doesn't matter because the world consume all the energy. So that is one approach. And then again, the risk is, as we mentioned, if the project is academic or commercial driven from the founders. Yeah, that is very important to have a look into. There will be an academic approach because it is high tech, but we need to get the commercial guys on board at some time. Yeah. So these are sort of some of the risks, I would say.
Well, Peter, countries in Southeast Asia and Africa and Latin America, they are rapidly adopting clean technologies here. Well, in terms of market potential then, which subsectors offer the most promising investment opportunities right now?
As we say, first of all, yes, there's enormous growth in the regions you mentioned, and that is really interesting, and it's a lot of good opportunities. You would say if you look into sort of the renewable energy area, that can be solar energy, wind energy, whatever, that is well-known technologies, we would say, and you can forecast. You can really forecast in a very good manner, in a very good way. And that is pleasant for investors, and you can also pretty fast get a positive sort of result on the investment. But I would say, again, what we prefer is to utilize biomass that can't be used for human nutrition in any way and not for animal feed. There are really, really upscale opportunities, and at the same time, what we look into is also producing what we call biochar that can help upgrading and agricultural sector as well. So the subsectors that maybe have different positive impacts is what we prefer, and that is actually easier to achieve in Africa, Latin America, and Africa compared to the northern zone. That is something with the climate situation. Yeah. So these are what we prefer there, honestly.
Okay. Well, Peter, then given the rise of corporate venture funds and government-backed climate accelerators, how can private investors kind of, add value beyond funding?
Yeah, I actually think that when we talk about the green tech part of the world, this is often where, as mentioned, we meet academic founders as are coming from universities with deep technology insight. And quite a lot of the investors in funds or direct investors, whoever, they are much more sort of coming in with a sort of the commercial, the businessman knowledge, so to say. So there is actually a very good fit that investors coming with private capital, they can add the commercial part of green tech companies, both from startups to actually pretty well-established green tech companies.
Well, the pathway to exit for climate and frontier tech startups is evolving without a doubt, often requiring longer timelines and more strategic partnerships than, traditional VC plays. So, Peter, as IPOs and traditional M&A take a back seat to longer-term partnerships and strategic acquisitions, how are exit strategies evolving for investors in green and climate tech startups, especially with more public and institutional interests in ESG-aligned portfolios?
Yeah, I think, again, if we go 3 years back, people were sort of there was a great plan, investing into green tech, let them develop, and then we will see all the IPOs, and it was fantastic, ESG-aligned companies, so to say. Also, the plan was perfect. It didn't materialize that way because what actually happened is it takes longer time, as we talked about, to get these companies to become at least close to sort of break even, or maybe even giving a surplus. So what we're seeing right now is actually many clean tech companies being in the machine room, trying to get the whole technology to work better, to get closer to become profitable. But when that happens, the world is ready for the IPOs. As the investors are searching for IPOs, as then they're looking for stuff to invest into. So that is okay. Just the current investors, they need to have more patience with the investments, and there is a bigger risk than originally expected because more green tech companies are simply going bankrupt.
Right. Yeah. Well, those are some great insights from you there, Peter. Thank you so much for joining me today.
Yeah, it's a pleasure, always. Thank you for having me on board.
Thank you. That was Peter Lundgreen, who's the CEO of Lundgreen's Capital. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.